Hey everyone, if you're on TradingView, pop over to the indicator section and search for BlackPickt Trend Trader and add it to your chart. Then, like I did, play around with the indicator settings to get those spot on signals. Now, you can enter trades with the buy and sell signals from the Syndicator. But hold on, you're not quite done with the strategy yet, because we need to filter out some signals in a specific market conditions like ranging trends. So go back to the indicator section once more and search for EMA difference and add this indicator to your chart as well. Just like the previous one, this indicator also needs some optimizations before you use it in your strategy. So follow the video and adjust the settings accordingly. Now, the Syndicator comes with two colors, green and red, which can either confirm or reject signals. So, when the histogram bar is positive and green, it confirms a buy signal. Similarly, if the histogram bar is negative and red, it confirms a sell signal. Check out the next examples to get the hang of it. In this example, a buy signal was generated and the corresponding histogram is green and positive. This means that the signal is confirmed and you can consider entering a trade with it. However, in this same example, the buy signal was rejected as the histogram is red. Trust me, you'd have incurred losses if you went ahead with that trade. So, this oscillator does a great job filtering signals. Moving forward, a sell signal is appropriately confirmed by a red histogram, while the next buy signal is correctly rejected. Alright, let's move on to the next phase. Back to the indicator section we go, and this time, let's search for 10 and 1 different moving averages and add this indicator to your chart. Now in this step, we're going to increase the indicator's period to capture long-term trends. So just like in the video, perform the necessary optimizations. Now, here's the deal. When the moving average line is positioned below the price, we're looking at a potential upward trend in the market. Conversely, when the moving average is above the price, we're likely dealing with long-term downward trend in the market. This trick helps us consistently trade in the market's direction, which can increase our success rate and, of course, our profit percentage. So now, it's time to establish the entry and exit rules for your trades. First things first, let's dive into entry rules for buy position. To initiate a long position, we need the first indicator to generate a valid buy signal. In the subsequent phase, paying attention to the fact that this buy signal corresponds to a long-term ascending trend in the market, which means the moving average should be positioned below the price. Lastly, in the final stage, we'll examine the histogram, ensuring it's displaying positive and green bars. So now, with all these conditions met, you've got yourself a valid signal. Now, you're ready to open up a buy position. Then consider using recent swing low as your stop loss level. Ultimately, for the risk reward, aim for a ratio of 1 to 1.5. And to kick off a short position, we'll start by waiting for the first indicator to give us a solid sell signal. As we move on, it's crucial to note that this sell signal should align with a long-term downward trend in the market. Consequently, the moving average needs to be positioned above the price candles. In the final phase, turn your attention to the histogram. Confirm that it's showing negative and red bars. So once all these criteria comes together, you've got yourself another valid signal, this time for selling. Now you're set to open that sell position. Consider using the recent swing high as your stop loss reference. And for the risk to reward, target a ratio of 1 to 1.5. But if your goal is to transform into an independent and robust trader with millions of dollars in capital, then watching this video is an absolute must.